Hey guys, what's up? What's going on? So I did take 2 trades today. There was this trade in here as well where I took it just about here, which I got out for, and then I also took a US 30 trade where I think I kind of lost faith in the short, and then I was looking at this to potentially be the long play, and I don't know. I let my bad side get the better of me, and I took a trade in here which essentially isn't very good, to be honest. I was looking at it more so like this, and then we had that, and I took the trade in here, and it just happened to not be the one, but it is what it is at the end of the day. It happened to become a loss. That's one trade, and then the other one I took was on New Zealand, where I was essentially trying to play the cross correlation here. I could have actually taken this trade here. Wouldn't have been the best, to be fair, because you can see it was arranged to go higher, and we are going higher now, and that was basically it. So let's have a little look. Actually, let me just check my trades. Celsius, there. Oh, it was on silver. Okay, yeah. So yeah, essentially what I was looking at is I was looking at this piece of price, and I'll quickly just go into that on the 1 hour. Bear with me. So essentially at first I was looking at the high there, but then what I understood was we cleared this low over here, and essentially I kind of got a little bit too squeezed in this one here, and you can see that we did kind of get an entry in the end, but I've left it now. And I was basically looking at that little squeeze there where there was more than enough, and I opted in for the trade, but it just wasn't the one, to be honest. And I took the trade here, so I was looking at it like this, but this is a major lesson for me because it was very squeezed, high risk as well, and to be fair, I didn't even have the full buffer in place, so I should have just really left this particular trade, but I let the better side of me, or call it the worse side of myself, get better of me, and I took this trade just here. I think it was roughly around about here, and then the protection was roughly around about there, and that was the second loss, and then that was that, and then I basically had GU, which essentially I got out here, but all in all it wasn't the best. I'm looking at EU for the long now. Now this is a bit of a strategic one, only because what we can see from a high time frame perspective on the DXY firstly is what's actually happened here. Well, okay, we've near missed that low, we've aggressively pushed away, which is completely fine. Now we haven't really had any pullbacks just yet. We've tapped into this area and we're getting the first signs of a push away. Could we technically turn into a larger pattern here to continue higher? Yeah, absolutely, and I'm fully for that. But can we also reverse from here to potentially come back into these lows? Absolutely as well. So ultimately, when we were looking at the DXY from a weekly perspective, originally we were looking at shorts when we were up here. Now that we've kind of corrected sidewards, we've left that gap and we're kind of just trickling towards it, but we can still be range bound for some time before we get there. What I'm really looking at here is we have this low, it's done more than enough for it to move higher, and that's completely fine, but we have to also be mutually aware that because we've tapped into this area, we've kind of just tapped up and now we're retracing on the 4, could we potentially be going short? And if we're going short, then we could potentially be seeing things like GU, EU and so forth going higher. And then when I looked at the DXY a little bit closer, what I noticed was, okay, we're getting that momentum on the 1 hour. We got the 1 hour close. Then we had the 1 hour close, and then we started formulating a bit of corrective price action in this area, but we're still committing. Now that could be a clear sign that this can either develop into something where it basically just kind of squeezes, comes back up, taps in there and sells, fine, fair enough, or it continues higher, doesn't really matter. But more so, could this just kind of retrace aggressively back to the downside, but in a corrective way, that this becomes a very sharp pullback? Now, what would actually be the reasoning for this to go all the way up here? Well, this could have just been really price moving in anticipation for major news coming, which is like inflation rates and Fed press and stuff, and we're coincidentally in these areas. So what I'm thinking is, has the long price already played, and now are we potentially looking to see if price will continue lower, or when this news comes out, will we get a secondary strong push to the upside? And if so, it makes sense for this to pull back now so that we can accumulate more volume in order for these news to come out and then price to continue. So profit taking and whatnot, whatever, I don't know what it is, but it's basically there's a lot of confluence for this to be a strong pullback here into at least these areas. So when I'm looking at something like EU, what can we see? Well, we can see that there's a potential expanding. Now, what do we know about expandings? We know that they work as continuation or a reversal in the right areas. So what I'm actually looking at here is, can I get an entry in here to go all the way at least up to here to fill this, right? Now, there is that little bit of that gapped price there, but if we're coming into some news, it does make sense where this then starts making its way, starts getting a bit corrective, and then boom, the news comes up, it spikes, and then we sell off, right? That in an ideal world would look really nice. It would be an aggressive play, but it would make sense. So that's something that I'm just going to be paying attention to. This can still make its way up aggressively as well, and then next thing you know, it's all the way up here, the news comes out, you're out of your trade because you don't want to be holding through that, and then for some reason it plummets or it goes to the upside. It is what it is, right? But the context is there, so that's what I'm looking at now. If you drill in too down on the lower time frame, you might see that you have something like this shaping up, where you could probably convince yourself like, oh yeah, this is going to be the continuation to the downside, but really and truly we haven't had a strong pullback yet. So I wouldn't be even looking at these time frames. I would actually avoid them unless you're refining for an entry, because we need to basically be seeing what's happening on the fall. If we look at it on the daily, we still have momentum, right? The momentum has been there. We've had gapping in price. After that strong bodied candle, it makes sense, and now price has dropped, but it's now wicked as well. And then if we look at it from a weekly perspective, you can see how stunning it was. So it's still very good signs, but a lot of the time what I've seen with gaps is they usually tend to get filled. They don't have to get filled immediately, but they do get filled. You know, here's a prime example where price closed here, it gapped, and then came back in and filled the gap likewise here. And you can see this aggressive little, there was a gap here between Monday and the week to week. And then, you know, it just pushed down and filled it. So what if we're seeing something similar here where we have that gap, and then during this week, because we have all that news going on, we spike up, we fill the majority of that gap, and then we come back down, or we continue to the upside. So there's that very strong level of neutrality there where we have to be fully aware of the variables in place. Now, how can we safely get involved on something like this? Well, it's simple. If you're taking the trade based upon this and confluence with cross-correlating it with the DXY, which is something that I do enjoy doing because it's worked for me in the past and I understand it well, we can see that equally we've done enough here to tap into this to potentially complete, and we are looking for a pullback. If we were going to make a pullback, does it make sense to come from here? Absolutely. Could we get protected? Yes. Do we have a candlestick confirmation which is near enough gray? Yes, absolutely. Do we kind of have the base of a structure formulating? Yes as well. So that's the thing, right? There's confluences for this to go to the upside and pull back, and there's confluences for this to pull down in order for it to go higher. So that's basically what I'm looking at on EU as well. I am going to be looking to see if we can get that play into the upside. Entry criteria wise, you know, you're good for the 4-hour play here, to be honest, as well. But more than likely, if you do get an insurance entry in here, which I'm not really going to say is going to be the easiest thing, because it's been an aggressive move to the downside, it could be an aggressive pullback to the upside. So that's why I would kind of look for the 4-hour personally. But like I said, at the end of the day, it comes down to preference as well to the individual. And yeah, there was also GBP Swiss. Now, GBP Swiss is interesting, but you know, the thing is, right, when you see that massive push, I don't think it's going to be looking that pretty, to be honest. This looks really nice, 1, 2, 3 into this area. If we did get a clear push down from where we are now, and you know, yeah, even from here, and we pushed in here and we gave a clear enough pattern here to continue, fine, fair enough, I'd look for that. But more than likely we're probably going to see this move higher at this point, because of how price is just corrective, and it could just do something like that and then continue to the upside, and then eventually, you know, do something like that, and then it's just one of those ones. So I need to be on the A ball with this one, because it's not one that personally I've had huge success with. I've been taking out a lot of risk entry, so naturally I would opt in for the insurance entry, especially due to the size of this flag, but it's also pretty good. And then GU, you know what, GU is nice. This is a structure that I'd take a lot of the time, but because of the market conditions, due to how the DXY is and the news and everything, I was just happy to kind of get out with something, and kind of just call it is what it is. But overall, I think there's huge potential and upside potential for a lot of these pairs. If we are looking at an aggressive pullback, then we're going to be positioned really well in EU for that aggressive pullback, but we'll have to wait and see how that performs. I think it's one of those ones where it could go slow, and then even overnight you could just see it really aggressively move. You wake up in the morning, London session, and price is up here somewhere, and then you're probably looking for shorts, and then it kind of just traps you and kind of keeps going. I wouldn't be surprised. It's one of those ones where as well you need to be very sharp. Now the context for silver is there because we are still looking at higher time frame for the shorts, but I'm going to stay out of this one because I did take that little loss, so it is what it is. But the context is there. You know, we had that retrace. In fact, the candle, if I wanted to take it, I would take it now and just crop through that wick, but personally I'm going to stay out of that because I don't want to be chasing this trade. US 30, there was this as well, because we kind of just scooped and then we sold off, created a little squeeze there, which you can see clearly over here, and then we dropped off. But once again, it wasn't the easiest trade to decipher, I'll be honest with you, and this was looking a bit like a middle section for it to go higher, so those were the risks involved. But from an A to B movement, it was there, and then we've done a lot now, so we have to be a little bit more patient. USD Swiss, now I am looking for the short from this retest area, but to be honest, with that massive push, this consolidation, this looks like a long. I wouldn't really get too sucked into this particular trade right now. I'm just going to wait for it to really reveal its cards. But as we know, if the DXY does sell off, which is actually happening right now, then we can see things like USD Swiss also sell off, and coincidentally it is coming from an area of interest as well, so we have to see that one through. Insurance entry on that, of course. And then this one here, so this is basically what we were looking for. We were looking to see if this is going to be the larger range to move higher, or if this is going to reject and give us continuation. What we are seeing now is that we are getting a larger flag in the middle, where this is now becoming an A, B, C movement, where I'm basically looking at that for the continuation to go higher, but it's very large in terms of where it is, so we need to wait for something a little bit significant. I will personally be looking for something like that, right? I'm going to look for something like this, where price does what it needs to do, maybe even just pushes up a bit, comes back down, and then correctively even taps into here, possibly could break through it a little bit, and then we get up, we get an insurance entry, probably not that large, and then we move higher. That's basically what I would probably prefer to take, that insurance entry there, opposed to anything else within this because of the size of it. Kind of similar to how we looked at GBP Swiss, just in a different scenario. Over here as well, EuroCAD's interesting because we've tapped into this low. This can still break and then come back in, and that's what I'm really looking for, but because of so much subjectivity around a lot of things, we just have to be patient with it. It's an insurance play for sure. Again, we don't want to be jumping into a risk entry here, even if it does play out. We want to just see what happens if it does something like that, sells, pushes back in, gives us something like that, and then we go. Fair enough, you know, that's the trade you want to be taking. Probably not that size again, but that is the trade. And then New Zealand CAD, likewise. This one is kind of just a clue for me, where the CAD pairs are just not yet ready to sell. This is pulling back, and you know, I was ideally looking for a clear continuation there to sell, but we didn't get it, so it's a clear message from the market that we just need to be a little bit more patient. Now this one is also very interesting because I was looking at this early and I did actually miss some information on this. So we completed on the 1, 2, 3 essentially. We didn't quite fully get there, but the override was there, and then we gapped. Now the gap put me off this pair in the moment, so I kind of steered away from it. Right, but I'm just going to quickly do the line chart quickly, and you're going to see something interesting. You're going to see that we actually did formulate structure here, right? We had this, we had that, and then also we came back in, we tapped into this area over here, and then we sold again, and then we had continuation on the way down, right? Entries over there. So it's one of those ones where, to be honest, you understand it well enough at that point there that you would have taken this trade. You would have probably taken it in there. I calculated this would have been 7%. This one would have been roughly around about 3%, and this one would be running. And then you probably would have been able to take a trade right here. In fact, as I'm looking at this, yeah, this is decent, to be fair. This could actually shape up because it's similar to what we're seeing across the board with the other patterns. It seems to be, the steepness seems to be a strong commonality right now with this. Yeah, could have taken that trade, to be fair. I wouldn't have mind opting in for that, to be honest. That looks pretty solid, to be honest, to me. Yeah, I would have taken it on that candle right there, and 15 would have felt a bit great, 20 to be extra safe, and 10 to be aggressive, and you'd have 3% into that low. That's pretty interesting for a trade, to be honest. But yeah, once again, it's not the one for me, but you can see it. And then obviously trading into the next point of interest, which is basically this area here. So we're going to basically be looking for that. But the problem is, as you get deeper in this run, trades get more complex and they don't become so clean. So a trade like that, even though it kind of looks similar to this and this, it is lower quality, and you have to be more on your management and careful with that. So that would have to instantly go straight to a break even, whereas a trade like this would also be quite aggressive one, but once you broke these lows, you would have moved to break even and or locked in some, and you would have been all right. And then likewise here, you would have been a little bit more aggressive. But again, it's just experience in the market, and you learn that over time. Aussie US dollar is a little bit corrective at the moment, I'll be honest with you, and it looks like it's just been accumulating in this area. It's very subjective. The shorts look really good, but at the same time, we are coming from this area, and we did tap into that little wick, so we kind of have a bit more to say that this could go higher. But really and truly, I wouldn't get too fixated on either or. I would be patient and wait for this, because honestly, even something like this could happen where we push down and then we come back up, and then we actually come in, retest, and do that. You know, something like that is actually possible as well. There's just so many possibilities across the board, but we have to be so careful of these variables, because so much can happen, yet so much isn't happening. But at the same time, just be careful. And then Euro New Zealand, not really much, to be honest. It's still in its corrective channel to the downside. It's pushing. There was trades though, for sure. There was a running channel in here as well. It's just, like I said, it's one of those ones where it's not the easiest to decipher. It's a corrective channel. Where do you want to get positioned? You have to be careful, because you can just get tagged in, tagged out, and that's not what we want to do. JP225, US 500, yeah. So we're just basically waiting now patiently to see how this performs. This could even be a trap as well. We have to be careful, because right now we're not seeing the cleanest of sequence, but it's just started to move away. So the question I have is, what's the main reason for this to move away, and where could it be moving to? Well, number one area is here, right? It's moved away. Oops, let me remove that. It's moved away, but truthfully, is it moving away to tap into this area to then just come back higher and then come back in here, and then we get the move, and then we move to the upside, right? That's also a very strong possibility that we need to be aware of. But more than likely, I am focused on these areas, and maybe even to fill this gap. I think that's something I'm more interested in, because it seems more possible. If we get continuation here, it's a no-brainer what we're going to be looking for on the counter-related pairs. But then, yeah, we'll be taking that trade, probably get the larger flag there and push into this point, and then we'd see that as a corrective potential correction into this, and then we'd have to evaluate if we're going to go lower or if we're going to push back and move back to the upside, right? It's one of those ones where we just need to be more on our A game and patient, and actually just observe this really well, because so many things can happen, and a lot of the time if you get too caught up into a trade, most likely you're going to make mistakes. So I did make a few mistakes myself, you know, nobody's perfect, we all make losing trades, but we also have good quality trades. And the most important for me was having the context there and understanding how I was going to look to take something. Now, I made the honest mistake of being too aggressive, and I learned from that today. And to be honest, it's not the first time. I am an aggressive trader, so it comes with the territory, with the style of how I'm trading. But then again, as time passes, I learned so many things about the way that I'm trading and how I can refine it and get a little bit better and better over time. So kind of going off the bat of that, main focus for me right now is Euro USD and cross correlating with the DXY. Now, I am still constantly cross correlating with the other US related pairs. I just want to make sure that I'm on my A game when it comes to taking a trade on these pairs. I don't want to be jumping into a trade and then, you know, just not being aware of why it's pulling back. Like, I'm fully pattern separating on everything that's going on, just to ensure that I am basically taking what I'm taking. But the main reasoning for EU long right now is just basically where we are. We haven't really had that pullback. Is it necessary? Not really, but is it probable? Yes, it's very highly probable. Now, we are in an impulsive push, but it's very unlikely for price to not pull back and give us something. Even if it's not the cleanest, it usually tends to give us a pattern that we can trade. So whilst people are waiting for that pattern, why not take advantage of the price to get there? But it does come with a level of risk as well. So situationally, you need to be that, otherwise it's worth waiting for the pattern. But more than likely, this is not just a trade into this area, this is a potential trade for the full reversal. So that's what I'm basically being patient for. But more so, I'll just be very honest, this can still come back down and push back up. You are trading straight into inflation rates, Fed press news, FOMC, you know, and then whatever. But you want to be careful with that, especially if price hasn't pushed away. If it's hovering around here, 100% you want to be getting out of a position if you've taken one anywhere around about here, because what's likely to happen is price will spike down, push back up if it's going to go higher, and then continue going and take you out. So this is just something that you want to bear in mind. But also, you don't want to catch a falling knife. If price spikes to the downside, you don't want to just buy that, because this can still continue to go with momentum, right? It's just one of those things that you learn over time. That look at this run to the downside on the left, right? Had you tried to buy this, you would have taken a lot of losses. Maybe there were some buys in there for sure, but a lot of the time you can see it coming. And what's actually happened here? Well, we've tapped into this hook point, we've retested that, and we've sold. Well, we've kind of done something similar here, but truthfully, we've moved away corrective, and now we're kind of in this area here, and we're just basically trying to decipher this, because if we can get a trade where if this did move into this area and we went higher, we could make sense of that, right? We could make full sense of that and be like, well, this is the structure. This was always the structure that we had to be aware of, and then we could take advantage of that. But we have to also understand that if price did something like this, right, and it didn't have to be so sharp, but it did something like this, and it came into those areas and it sold, then we have to also understand that that was always a possibility, right? That something like this probably didn't have to be that dramatic, to be honest. It could even just be like that. So there's so many variables to how this can really play out and what could actually be happening. We don't even know if that's the full structure. We just know what we're trading right now and what's relevant. So I wouldn't get caught up in this higher time frame subjectivity. You just want to make money from an A to B movement, and the main focus should be, what am I trading, how can I get involved, and how can I protect myself? And what I'm trading here is the expanding, right, pattern that could potentially be forming, and I'm looking for the aggressive pullback. So I've got not only the entry to go long, but I've also got the pullback to play with, and then I've got the potential of the DXY rejecting from an area of interest that if we do go from here, it's likely that my EU trade will probably go long. So that's the thought process behind it. Once again, you know, I'm in profit, so I don't mind taking a slightly higher risk that has a really good thought process behind it, and then at the end of it, if it does go worst case scenario, I can decipher it and see what I can learn from it. But more so, I'm quite interested to just see how this plays out now. So that kind of summarizes the whole video for today. There wasn't really much else that I wanted to go on. I don't think there was a lot really happening in the market. There was just basically this, that always knew that that first objective touch wasn't really the one for me as well. And then there's potentially this, and then there's GU, which really and truly, with this retesting this, if it sold off now, I would make sense of that, and I would understand that, okay, well, it just came up to basically retest this area, and now it's okay to go. That's basically the line in the sand now. So if it goes back to the downside from here, then this structure is basically good to go. If not, then we know that this is getting more complicated. It may require a level of evolving it as well, where we just don't know at this point in time what the ambition is for this pair. So I don't truly think it's going to be this sort of expanding, but I think that it requires a good level of patience just to wait and see how this is going to shape up. So let's have a look, guys. We'll catch up tomorrow and see how these pairs are moving, but more than likely I think we're good to go. We're good to go for a lot of these pairs. Eyes on EU for sure, and SPX. If the SPX does sell, then we know that we can get involved on counter related pairs. But truthfully, I wouldn't waste my time on a lot of these pairs. I would just go full focus on the DXY. Be aware of the news that we have coming out, but once again, after the news, if we do really get a nice sell-off and then we get a decent sequence, we might actually be able to get an abundance of trades here. So